This is the Daily Market Rundown live from the Tradelo trading floor. It's March the 12th. Some highlights from today's show. EU retaliates to Trump's tariffs. The US CPI is now in focus. And Calm presents a dip buying opportunity. Good day, traders, and then welcome to the Daily Market Rundown. A number of things to get going through. We obviously, of course, do have the key CPI coming out in just over 30 minutes. Now, looking across the board, it's relative positive calm in Europe. We can see Europe is up across the board. DAX up almost 2% on the day. CAC up 1.5, FTSE MIB up 1.5. So it's very much a buy-only situation in Europe. Of course, this comes off the back of some of the news around a truce, a 30-day truce between Ukraine and Russia. Also, just in general, we did see a little bit of a sentiment shift late yesterday afternoon, led predominantly by the US. Now, with that in mind, let's get stuck in and talk about our first topic for today. The EU, led by von der Leyen, has struck back against Trump's tariffs. Of course, those tariffs came into play today. The EU has said they will impose retaliatory tariffs on the US worth up to 26 billion euros. But key is those only come into effect in early April. So what the EU is doing now is sort of striking back at the US, saying, well, look, we're not going to ultimately accept these tariffs that you're imposing on us, and we are going to retaliate. Now, importantly, what we know from Trump's playbook is that typically when someone does retaliate with tariffs, what does he do? Well, he retaliates with even higher tariffs. So I think this is the next part of this effective narrative, is that we are going to see Trump come out at some point. He is, of course, going to retaliate on top of the EU's retaliation. Now, in terms of timing of when this comes, well, look, what we do know is that typically Trump, will ultimately only retaliate once we do get the actual EU imposing those tariffs. But like I said, those only come into play in April. So it may be a case of wait and see for a couple of days and weeks. However, what we've also seen is that Trump hasn't really said anything about the EU for some time now. Okay, what we do know about EU in terms of tariffs is that the plan is the US will impose tariffs on the EU with including the VAT model. In other words, a much higher form of tariffs on the EU. But we haven't seen anything. There's absolutely no tariffs being put in place on Europe as yet. So keep a close eye, because that is going to cross the wires at some point. Now, with that in mind, if we look at the euro, what we can see is that has entered very much overbought territory in the near term. Justifiably so, of course, with all the spending package going on. It makes absolute sense for the euro to be up here. However, we've run into that sort of October-November highs. We can see the market did back off there yesterday. If you're trading the markets yesterday, you would have noticed that we started to see a little bit of euro underperformance when we got into that 109.5 on the spot. What that does suggest is the market's a little bit full up at this point. What it does suggest is that near term, we are likely to see that euro trade back down towards that 108 figure. So anywhere around that 108 quarters, I do suspect the euro is going to stage some sort of an off over the course of the next couple of sessions. Keep an eye on that. The trend is, of course, firmly intact to the upside. But like I said, it's very much an overbought market. Now, should we hear any news from Trump today, any sort of retaliatory news, any sort of news around if the EU is going to tariff us, we'll just tariff them even more, I do suspect that will sort of force a little bit more profit taking in the euro, given how overbought it is. So keep a close eye on that. It's definitely a market that is in play. Now, with that in mind, of course, today is all about the key risk event. It is all about the US CPI data point. Expectations is for core to come in 0.3, as well as the headline to come in at 0.3. Now, what does that mean in terms of the charts? Well, we can see that 0.3 mark is pretty much what we saw for a good 4 months in a row last year. Also keep in mind that this is the point at which the Fed, they still maintain this confidence that their target will be reached. However, they sort of shifted towards this. It will be reached perhaps only in 2026. Now, what we did see was a little bit of an uptick last month. It caught the market a little bit off guard. It did start to create this stir, or this word stagflation, which is a higher inflation number and, of course, a lower growth environment. So that is the key theme for today's session. It's all about stagflation. are we actually entering a stagflationary environment or not? If the answer is yes, markets are going to stage a fright. If the answer is no, markets are going to seem relatively pleased. Now, what does that mean for today? Well, it's a relatively straightforward number today. If we get a repeat of last month at 0.4, guess what? Stagflation is what all of the news media outlets are going to be talking about. It's this scenario where we're seeing a slowing growth in the US, and at the same time, we see stubbornly high inflation. Okay, so 0.4 today, don't be surprised to see some continuation of the recent risk off. On the flip side, a 0.2 does open the door to this idea that the Fed can continue that rate cutting cycle, starting with, of course, a cut at its May meeting. Okay. If we were to get a 0.1, for whatever reason a 0.2 miss, well, that does open the door, of course, to not just the Fed cutting in May, but perhaps the Fed cutting in May and then every other meeting where they have some of the SEP forecast thereafter. Okay, so it just points to a scenario where the Fed can perhaps cut a little bit more than what the market expects. And like I said, in the current scenario where the markets are quite spooked, where they're just desperate for a little bit of positive news, the market will latch onto that and we will have a really good day to the upside. Now, in terms of a 0.5 print, whilst very much unexpected, I mean, probability-wise, we're talking about less than a 1% chance of that happening. But if we got a 0.5 print on the core CPI today, that's going to scare the living daylights out of the market. That is really going to force a lot of very aggressive sell-side action. So keep a close eye on that. Of course, the expectation is 0.3. That's the most likely scenario. And like I said, if the number comes in line, it's probably going to be good enough for the markets, just given the sentiment. Okay. Now, in terms of some of the reactions, you can go and read through that in your own. But like I said, the most likely outcome is a print between 0.24 and 0.28. And these are just some of JP Morgan's expectations for market moves. Be careful, of course, with these market moves. This is just sort of one person giving his opinion. They're not telling you what their book is. They're just giving you a bit of text. However, I think the general thinking for today is, given the recent sell-off, the aggressive sell-off in the market, given how oversold risk markets are in general, I think an inline number or even a miss will be taken very, very positively. However, a beat will open that big S word, that stagflation word, and that, of course, will scare the markets to the downside. Now, in terms of what to expect S&P today, we spoke a little bit about some of the liquidation plays. We spoke about this in yesterday's daily market rundown, so go review that if you missed it. But what we spoke about is two types of plays to expect. The one was ultimately where we have a straight line reversal of the liquidation move that we saw on Monday. So Monday we had the liquidation move, and yesterday we said we're going to either get a straight line reversal on Monday, or we're going to get a scenario where we have something like this, where we have a period of Tuesday, Wednesday, and Thursday just trading back up towards those Monday's highs. Now, pretty much we are going to get option number 2. It looks like that the market has found a relatively decent bottom in the S&P 500 as well as the Nasdaq and the Russell. So I do expect more upside today. From a pure technical perspective, that is the play. It's a market that should be bought, but not bought aggressively, bought on the dip. However, CPI, of course, gets the focus. Okay, it's very, very important. If CPI comes in line today, I fully expect we're going to get another up day. And of course, we are going to grind our way back up towards those Monday highs. But like I said, it's not a case of you want to be buying too aggressively because we are in an environment where the VIX is very, very high. Okay. Now, with that in mind, there is the daily chart. As you can see, nice and oversold. Do note we are in a one-time framing sequence. In other words, we have not closed above a previous day's high in this entire sequence, dating back to, of course, the start of, or the end of April, the end of February. So do note, however, the moment we do close above a daily low, if we get a daily close above today, like I said, we are going to make our way back up towards that Monday highs around that 57.63, but it'll do it over the course of a couple of sessions. Okay, so sentiment will shift today if we close above yesterday's highs around that 56.20 in the future space. So keep a close eye on the closes today, because that's going to tell you a lot about what to expect in the upcoming sessions. Now, finally, the chart at the moment, the VIX, we are elevated. As you can see, we're also one-time framing in the VIX. We've not closed below previous day's low. We do see a little bit of positive sentiment stepping in. We can see that VIX below yesterday's lows, below that key 26 level where we double topped last week. If we close below 26s today, close below yesterday's low, like I said, all of it points just towards more short-term upside, a little bit of a relief rally, not a shift in trend, not suddenly, buy every high. No, just a little bit of a relief rally, given we are very much extended to the downside in the near term. Okay, so with that in mind, the summary is it's all about CPI. We've got to pay very close attention to that CPI. If it comes in line, like I said, the technicals will take over. We will get that relief rally, and that is the core focus for today. If there are any other questions, do post them in the Discord channels. Otherwise, like always, it's going to be a volatile session with a VIX at 26. You've got to expect anything. Keep an open mind. Otherwise, good luck out there. Manage that risk. Go make some money.